Repair your credit like the pros. Chapter 24. Credit success and where to start. After you get rid of the negative information on your credit report, you're going to need to show positive credit. You cannot achieve a high credit score without positive credit. Neither can you get approved for a home loan without positive credit. Accordingly, here are directions for taking the next important step. I recommend copying out the list below the old-fashioned way, with pen and paper. The act of writing it out will help cement it in your memory. But if you prefer, creating a Word document is also effective. After your list is written, write a nice big X on the numbers of the items you are already doing. Circle the numbers of the items you need to do, and get to work on those. Review the list at least once a month. Put it on your calendar so you don't forget. When a circled item is completed, X it out. There's a lot of satisfaction from seeing your progress with the big X's. My essential list for credit success. 1. Establish credit in your own name. Married people do not share a credit score, and you do not inherit your spouse's credit when you marry. You must have accounts with your own name on them in order to get points for your own credit score. They may be individual accounts or joint accounts. If you are young and starting out, you can be an authorized user on a parent's account to help get established. But you must get credit in your own name alone, ASAP. You want a minimum of 3 accounts to get approved to buy a home, and you only have to be 18 years old to become a homeowner, so don't delay. FHA requires 2 accounts, but conventional loans, which are better than FHA, require 3 accounts. It takes 6 months from the time you open your first account to have a credit score. You need established credit for important things such as qualifying to rent an apartment, financing an automobile, getting a discount on auto insurance, and buying a house or a condominium. 2. Keep your accounts open. You want to establish old credit. Your age is not a factor in credit, but the age of your account is. You receive more points for longevity. Closing a credit card could hurt your credit score because it affects your debt to available credit ratio. For example, if you owe a total credit card debt of $10,000 and your total credit is available is $20,000, you would be using 50% of your total available credit. If you close a credit card with a $5,000 limit, you will reduce your available credit from $20,000 to $15,000 and change your ratio from 50% to 66%. This debt ratio increase will cause your score to go down. 3. Use your credit card at least twice a year to keep it active. If you have a credit card and you haven't used it in years, you aren't receiving the good points from it that you could be. In fact, it could actually hurt you because the credit card system thinks you might be getting ready to max out the card. But when you use a card for minimal purchase 2 or 3 times a year, the system thinks you will not run up a sudden balance because your history shows you use it minimally. Consequently, you receive more points to your score.